In our last video, we did a walkthrough of a top-down market analysis on the US30 index, having established the directional bias as bearish, from November 3rd, where we monitored trade signals generated by our Trailblazer scalper indicator. We anticipated a retracement into a price gap within the premium zone from the turncoat level, with a potential liquidity purge before the continuation of the downward move. A move that is expected to persist until price reaches a higher timeframe opposing key level, where the resumption of the dominant uptrend may occur. You can see how the market played out just as anticipated, with a strong confluence zone marked by a retracement into a price gap within the premium area, following the purge of liquidity. Now, note the heavy turbulence zone that preceded the upthrust into the premium area, where we will begin examining the trade signals generated during this phase, to evaluate the performance of the indicator. This way, you can assess the indicator's performance not only in trending market phases but also in range-bound phases, which can be a real challenge for traders. A buy signal triggers live on the 5-minute timeframe at 12:50, Tuesday, November 4th, where we enter a trade to capitalize on the initial upward drive. This is based on the Sheik's strategy trade entry option 1, where the entry is at the trigger bar open, with the exit at the next structure levels to secure any hard-earned gains, only taken provided there is sufficient room between these levels to justify the trade. You can see the preceding massive downward move, where we caught some epic live trades based on these sell signals as shown in our last video. Now, in this buy entry scenario, we will showcase the extent to which your trades could be impacted by drawdowns while defiantly staying in the trade, without securing any profits. You will also see a live illustration of the Sheik's strategy trade entry option 3, a retracement-based entry, as outlined in the debut video of the Trailblazer scalper indicator. Be sure to check out the channel pages to watch that video if you haven't done so already. Moments later, we can clearly see how this buy signal delivered an impressive 91-point move, with a drawdown of 25 points, having taken out the preceding structure highs. We can now anticipate a retracement within a discount zone to push price higher, a typical market occurrence worth developing a strategy around, and the Trailblazer scalper indicator Sheik's strategy, indeed, delivers on that. This is the New York Open live session, where the anticipated pullback into a discount zone may present a long entry opportunity. Note the liquidity purge at the lows, as the market gravitates toward a price gap within the discount zone. Which one of the three gaps below equilibrium will hold for a buy setup? That remains to be seen. As shown here in real time, failure to exit the initial buy trade can erode any gains achieved, as drawdown takes effect. Price may retrace to the proximal, mid, or distal level of a price gap. Trade entry decisions are made on a case-by-case basis, at the trader's discretion and subject to risk-reward evaluation. Let's mark the proximal level of price gap 2, preparing to go long as price taps this level and surpasses it. That's a buy entry right there. Sheik's strategy trade entry option 3, a powerful retracement-based entry worth capitalizing on. It is modeled on repeatable market behavior, with signatures and footprints that once seen, cannot be unseen. These patterns are bound to recur, day in and day out across trading sessions as the charts unfold. Identify them in a timely fashion and execute trades in line with your analysis, adhering to a tried and tested, ironclad strategy that gives you a competitive edge in the markets. The market taps the distal level of price gap 3 as we speak, a level from which we can anticipate a rejection and a potential turning point for a second drive upward toward the premium zone, in line with our market analysis. As homework, monitor this trade signal and share the maximum gains in the comments section. Fast forward to November 5th, a sell signal triggers at 2:05 following the market reopen, with 3 preceding signals that have offered highly impressive moves. The latest signal has delivered a 41-point move already, as price emerged from the higher timeframe upper key zone during the range-bound market phase. As a general rule of thumb, this is a no-trade zone. But the big question remains, is this range tradable? Well, if and only if the span between the upper and lower key zones is sufficiently extensive, and signals are generated in a timely manner to justify trade entries while factoring in risk-reward ratios. In such scenarios, range-bound traders must exercise discretion. We see a further decline in price, down to the H1 timeframe lower key zone, where partial profit-taking is ideal, even if lower prices are expected to break the previous structure low. The latest sell signal has delivered a 115-point move so far, with a drawdown of 33 points, measuring from the next bar open. These signal moves highlight the efficacy of the indicator and its ability to also track the twists and turns of range-bound phases, helping traders maneuver their way effectively in challenging market conditions. Moments later, price eventually returns to break the previous structure low, where closing the trade at this point helps preempt giving back hard-earned gains. This follows a retracement from the proximal level of the lower key zone to the proximal level of the price gap, where price gathered momentum and dropped to break the swing low. This underscores the importance of marking up your charts accurately, toggling them on and off as needed. You can now see that this sell signal has delivered a 160-point move. Beautiful. Now, let's not lose sight of where we're headed, a rally to a premium zone, from which we can anticipate the resumption of the downward move as detailed in our market analysis. While our primary focus is on identifying buy opportunities, we also examine and annotate sell signal moves to provide further insights and facilitate comparative analysis. You can see that we then get a buy signal triggering at 5:05 after price emerges from the lower key zone, having delivered a 125-point move so far, with a drawdown of 8 points. This serves as the initial drive upward, while we anticipate a retracement-based entry to capture the potential next leg higher into the premium zone. A new sell signal triggers at 11:15 as indicated here, after price emerges from the upper key zone, where we can see an active trade. Will this also deliver a decent move in this range-bound market phase? The sell signal did indeed deliver, having taken out the London range low, just as anticipated, since we typically see the purge of key liquidity levels before the market proceeds in the intended direction. It offered an impressive 93-point move with a drawdown of 33 points as indicated here. The preceding buy signal now updates to 139 points. Note also that price has tapped into a discount zone, where the active sell trade should be closed after a deep retracement of 70.5%, positioning it for the next leg upward. A buy entry at this level is therefore in order, given the multiple confluences with price reaching structure zones at a turncoat level. As always, monitor these buy signal moves and share the maximum gains in the comments section. Thanks for watching. If you found this video insightful, don't forget to like, comment, and share it with others. Subscribe and turn on notifications to stay updated with our latest content. Check out some more videos on the channel to learn more. See you in the next one.